Hi guys, this is Thomas, your trusted advisor here. Previously in Connect with Thomas, I invited Andrew Chang from Citywide Mortgage Services to give us tips on how to get your first mortgage approved in Canada. This week, we'll continue on three more things. 1. What are the other hidden costs when getting a mortgage? 2. What are some incentives as a first home buyer? And lastly, should we go for variable or fixed interest rates with this low interest environment? Let's get started.
And from what I know, Andrew, sometimes, the cost of having a property is not just the listed price, because I know there will be legal fees, there will be taxes, and there's some other like inspection fee, etc., etc. Can you walk us a little bit? Is it just the listed price on the MLS websites?
Yeah, no, that's a very good point, Thomas. So a lot of buyers assume that, hey, I'll give you for an example. They'll say, hey, I'm looking for a $500,000 property. I have $100,000 saved down, which equates essentially to 20% down. And they're going to say, okay, I have enough saved up. I'm going to use the whole $100,000, and that should be sufficient to close this property and close this transaction. But unfortunately, a lot of them don't take into account that there's other costs associated with closing and buying a property. You always have to get an appraisal depending on the type of transaction. So appraisal fees can be anywhere between $300, $400, $500 depending on the type of property it is. There's legal fees that you have to pay your lawyer or notary to register the transaction for you. That can be anywhere between $1,200 to $1,500 to maybe up to $2,000 depending how complicated your transaction is. There's home inspection fees if you want to make sure that the property that you're buying doesn't have any issues. And a big one that a lot of people don't realize is something called property transfer tax, which is the fee that we have to pay to the government whenever we purchase a property and the property transfers title to somebody else. So property transfer tax is usually a big expense that a lot of people don't take into consideration, and that can be quite expensive. So if you guys ever have any questions about that, feel free to let me know. But yeah, those are substantial fees. So I always tell the clients, whenever you're budgeting and whenever you're trying to figure out how much money you need to purchase a property, you always have to leave a little bit of wiggle room on the side to make sure that you have enough money to not only pay the down payment, but to pay the closing costs, as well as making sure you have a little bit of money on the side for a rainy day as well.
And speaking of first home buyer, what are some incentives out there? Because I know that, for example, RRSP, you can actually take out $35,000 tax-free for your first home buying. And there's some incentive on the taxes as well, too.
Yeah, so first-time home buyers, there's a lot of incentives out there that can help them for the first time when they're buying a property. So some of those include the RSPs, which you can draw up to $35,000 maximum per borrower. So for example, if there's two of you, you can each borrow up to $35,000. However, there's caveats that come with that, which include you guys must occupy that residence as a principal residence. So for example, if your first time buying is going to be for investment or rental property, you're not allowed to use this RRSP program. The funds from the RSP also must be deposited in the RSP account for over 90 days prior to you withdrawing it. So for example, let's say you just put the RSPs in 2 weeks ago and suddenly you want to buy a property, you're not allowed to pull that out as well. And depending on the purchase price for first-time buyer, you could get a rebate or credit back on the property transfer tax. So depending on what your final purchase price is, you may not need to pay the full amount of property transfer tax, and you may get a percentage rebated back to you depending on the price. And another thing that a lot of people may not be aware of is that gifted down payments are allowed from immediate family for purchases for owner-occupied property. So if a client may be a little bit short or may not have exactly enough money to be comfortable to purchase a property, if they have family that's willing to gift them money to help them purchase a property, that is allowed as well. So a lot of people aren't aware of that. So if you guys do have family that's willing to help you guys out, it's definitely a big plus. And if you're worried that it might be a big hassle or a big ordeal to do that. It's actually very simple. Basically, the money just needs to be deposited into the client's account, and the family member signing over the money just has to sign something called a gift letter, which basically states, I'm gifting this money to so-and-so to help them purchase this property, and they don't have to repay that money back to me.
Awesome. And I do have one final question, and I'm sure a lot of people are paying in, and I'm sure people are interested, is about the interest rates. So I know that for interest rate, there's something called the variable interest rate and the fixed interest rate as well too. And with the current low interest environment, do you have any suggestion which one will be better for the people in Canada?
Yeah, so obviously with everything that's going on right now with COVID and the markets and the interest rates being at historic lows that we've never really seen before, there's not really a right or wrong answer to, is fixed the right product for me, is variable the right product for me. It really depends on the borrower's situation. It really depends on their risk tolerance and their scenario, and kind of how risky can they be? What is their cash flow situation like on a month-to-month basis? So just to give clients a little bit of information on kind of the main benefits and pros and cons for each product, a fixed rate, essentially, the pro of it is that the interest rate won't fluctuate throughout the term of the mortgage. So whatever your rate is that we get for you at the time of closing, that's going to be your rate for the entire term. So you don't have to worry about it going up. You don't have to worry about it going down. However, the downside for that, for fixed rate mortgage, is generally the penalties if you break the mortgage. And breaking the mortgage refers to whether you could sell the property, that's breaking your mortgage. If you want to refinance your mortgage to pull out equity, that's breaking your mortgage. Anything that changes the terms of your mortgage is considered breaking your mortgage. So the fixed rate penalty is quite a bit substantially higher than a variable rate mortgage. So that's one big downside as well. For example, the variable rate mortgage, the pros of that is, generally speaking, in a normal environment, a variable rate mortgage is lower, or should be lower, than a fixed rate mortgage. So you should be saving a little bit of interest on a month-to-month basis for that. However, the big risk for a variable rate mortgage is that if the interest rates and the prime rate changes up or down, your monthly payments will generally change with that. So it will cause fluctuations in your monthly payment, which a lot of borrowers may not always be comfortable with, because if they only have set aside X amount of money on the budget every month, they don't want to have to worry about one of these things going up or down by quite a bit. So that's kind of one downside for the variable rate mortgage. However, if you have someone that's willing to take the risk and is not too risk adverse, they're usually willing to take a variable rate mortgage and ride out the fact that they're going to be saving money in the meantime, and they can take the risk of it fluctuating up and down. And another big pro for a variable rate mortgage compared to fixed rates is that if you do break your mortgage at any time, the penalty calculation for a variable rate mortgage is quite a bit lower than a fixed rate mortgage. So generally, you're going to be saving a lot of money in that instance as well. And kind of the last main benefit of a variable rate mortgage is that if at any time during the term of your mortgage, you can generally lock it into a fixed rate mortgage at any time with no fees and no penalties. So if you're worried about it fluctuating up or down, you can just lock it into the best fixed rate at that time. So it gives you that flexibility. Whereas if you're on a fixed rate mortgage and you notice that the variable rate mortgages are very, very low, you're not allowed to just switch it to a variable rate mortgage at any time, because that would be technically breaking your mortgage, which would trigger the penalty, which would be quite substantial. So right now, there's not really you should do this or you should pick this product. It's really based on each individual's situation, each individual's financial situation, and I try to help plan around that to let the client know, hey, if you're a little bit risk adverse, maybe you should go for this product. Hey, if you're willing to take the risk, you should take this product. If this may not be a long-term home for you, and you're thinking of maybe moving or breaking your mortgage within a few years, maybe this is the product for you. So it really just varies on a case-by-case situation, and our job is to help plan and help the client figure out what is the best product for them. Because at the end of the day, clients always worry about what's the rate, and that's not always the most important thing for the client. It's about figuring out which product is the best for their situation now and for their situation in the future.
Oh, wow. And that's really good information because, I know a lot of, especially the millennials or the young families and individuals, what they do is they will actually just go shop around on the internet and say, hey, to find the lowest interest rate. And I know that that's not the only thing to consider when to get approval, especially maybe you have debts, how do you get a bigger approval rate? And, what are the factors that can affect the mortgage afterwards? I think that's all, essential as well too.
Yeah, and I think that's a big misconception with a lot of people because they think, oh, I found something on Google, it showed the lowest rate. Let's just go for that without knowing the fine print and without knowing the product details. Because unfortunately, a lot of these lenders will always obviously post their quote unquote lowest rate product, which unfortunately, usually 95% of the time doesn't apply to that buyer situation. So they don't even qualify for that product. Or if they do qualify for that product might be a no frills product, which basically means it's a very, very restrictive product with very, very high penalties compared to a regular standard mortgage. So there's a lot of things that they need to consider rather than just, hey, the number looks really low, let's just go for that. But there's a lot of fine print and a lot of detail within each mortgage product that the clients have to consider. So I always tell the clients, if you guys ever have any questions, please reach out and, don't be fooled just by the advertised rate because those aren't always the best products for the client.
All right. So I just want to say thank you so much, Andrew. There's a lot of information, and definitely that's a good review for all of us as well too. And I know this is just only the tip of all the things that we need to know as well too. So I hope I can invite you back for more details about mortgage because I'm sure besides me, a lot of people are looking for their first property or they get their mortgage renewal as well too. All right. So again,
for sure.
Thank you so much. And then, and of course, for those of you who have questions about anything about mortgage, I will put all the details in the description box below as well too. Or you can just put your comments in there, and I promise both me and Andrew will be here to answer your questions. And again, thanks so much, Andrew, and I look forward to see you in the next episode.
Thank you, Thomas. Have a good day. Talk to you soon.